Don't you hate it when your fresh manicure starts to chip after a couple of weeks, or your most loved pair of jeans gets worn and frayed? It's an unfortunate but inevitable part of having these luxuries. What's up, everybody, and welcome back to the Keeper YouTube channel. My name is Tyra, and I am here to teach you everything you need to know about 1099 taxes. Here on this channel, we create resources for freelancers, independent contractors, gig workers, and anyone else who files or should be filing business taxes. Just like a manicure or a pair of jeans, our cars naturally get some wear and tear after using them for a while. But did you know you could write this off on your taxes? If you drive for work, you might be eligible to claim this write-off. I'm about to tell you everything you need to know. Today's vocabulary word is depreciation. To put it plainly, depreciation is the way to measure the declining value of an asset. In this case, your car. It should come as no shock to you that a Ford Focus bought in 2014 is less valuable than a Ford Focus bought in 2019, no matter what CarMax tries to tell you. The more you drive your car, the more wear and tear it gets, and every single year, new models of cars are released with improved functionality and features. So the car you bought 5 years ago just can't compete. That's why it's always a bargain to find a used car with low mileage. So let's get back into our regularly scheduled programming. Taxes. So what does auto depreciation mean for your tax write-offs? When you buy that $20,000 car, you can't write off the full $20,000 that same year, but rather gradually over a 5-year period, deducting $4,000 a year on your taxes for 5 years. But why 5 years? That's the amount of time the IRS deems as the useful life of a car. Just like your fresh manicure will be all chipped off in a few weeks or a month, a car's value shrinks significantly by the end of 5 years. It doesn't matter what the actual resale value of the car is at the end of that 5 years. In the eyes of the IRS, it is worth $0. So there are two options you can choose from to depreciate your car for taxes: mileage and actual expenses. You can think of mileage deduction as business mileage, aka the number of miles you drove for work in a given year. The mileage rate is how much you can write off per business mile. It's designed to cover more than just the cost of gas. It also factors in the average cost of repairs, insurance, and of course, depreciation. This option is best for people who drive a lot for work. Think Uber and Lyft drivers and even truck drivers. For more details of how to calculate your standard mileage deduction, head to the blog post linked in the description. Now, the actual expense method. The actual expense method, on the other hand, allows you to claim your actual vehicle costs such as gas, oil changes, repairs, insurance, and depreciation. You'll use the actual amount you bought your car for. If you bought your car on a loan, you'll still use the sales price even though the loan isn't paid off yet. Sadly, you can't deduct your monthly loan payments. Depreciation is the only way to write off the cost of the car itself. But the good news is you can write off the cost of a vehicle you bought several years ago. It doesn't have to be one purchased the same year you claim it on your taxes. Keeper also makes your life a little easier by letting you automatically track auto expenses in our app. So check out the app linked below in the description. And one more piece of good news before I wrap up this video, guys. If you use your car more than 50% of the time for work, you're eligible to take accelerated depreciation. This means an even bigger write-off. There are two ways to do this: the Section 179 deduction or claiming bonus depreciation. Both result in a max first-year deduction of $18,200. The remainder can be carried over and depreciated in future years. For more details on these options, check out the blog post linked down in the description. So to those of you who use your car for work, I hope you are rejoicing and saying hallelujah at everything you just learned. My main goal is to get you more money back on your taxes. I want to know, what is the first car you ever drove and how long did you drive it for? Let me know down in the comments. I can't wait to see what you guys put down there. And if you would like more easy to digest tax content, make sure that you give this video a like. And if you have not already, make sure you hit that big red subscribe button down below and make sure your notifications are on so you can get all of the alerts on all things self-employed taxes. Thank you guys so much for watching, and I will see you in the next one. Bye.